So as I said in the beginning, we're going to go from the macro down to the more micro and talk about the specific reforms. So we'll start with my partner in this enterprise, Yao Yang, who, as you know, it's a warm day based on where you got your PhD at the University of Wisconsin up in Madison, where it's plenty colder than here. And he is head of CCER. So let me first have Yao Yang talk about Hukou reform and its effect on economic reform.
Okay. I'm going to talk about a specific reform agenda. That's actually very high on the agenda of the current leadership. Okay, that's the Hukou. So first, what's the Hukou system? The Hukou system was a household registration system that was implemented starting in 1958. The purpose was to restrict the people's movement from one place to another place. Essentially, if, say, you are born in a village, then you are going to get a Hukou of that village almost forever, unless you go to a university, you join the army, or lucky enough, get a factory job in the city, right? So that's what Hukou about. In a sense, I think it's kind of a long scar on the face of the People's Republic of China, because it's really restricted the movement of people. I mean, according to our first constitution, the Constitution of 1954, there was a clause saying that people have the right of free mobility. But because of the Hukou policy issued in 1958, that clause was eliminated from the Constitution. But since 2003, when the Wen Jiabao Hu Jintao government came into office, the Hukou system has been eroded quite a lot. Right? So the government issued a lot of directives to lift the restrictions on free mobility. Currently, two things are still very important connected to Hukou. One is children's education. The other one is access to welfare. Okay. The second is very easy to understand, but the first one, I think I need a little bit explanation. Suppose I have my Hukou from Xi'an, my birthplace, but now I move to Beijing without Hukou. That means my son cannot take the college entrance exam in Beijing. Like if my son cannot go to university through Beijing, because every province has a quota, right? So that's a huge restriction on the mobility of people, especially long-term mobility of people. So it's not just about rural to urban migration, but also about migration between cities. Okay. But the government, the coming government, I should say, especially the coming premier, Li Keqiang, I think it's quite determined to reform the Hukou system. In as early as last February, there is a government policy issued to allow people to apply for local Hukou in small cities, as long as they have a stable job and also a place to live. That actually included rented homes. So that's actually quite generous. That means the Hukou system is going to open almost completely. And in those medium-sized cities, there is a restriction, that is, you have to work there for 3 years. For big cities like those provincial capitals and Beijing, Shanghai, no policy change. But curiously enough, this policy has been allowed reforms for 1 year. We haven't seen very concrete steps toward the true reform. But looking at the government policies, you can see a lot of pressures from the center. But at the local level, there are a lot of resistance. The NDRC sent teams to different cities, and the information came back was that none of those cities supported the Hukou reform. One of the early signs of progress is on college admissions. I think by now there are 18 provinces that have announced some reform measures to allow migrant children to take the admission exams in their recipient province. Some of them are quite radical, only requiring like 1 year high school in that province. Some of them were more conservative, like in Beijing. The college admission is still not open to migrant children. Not only technical colleges are. Okay. Why is the reform significant? As I said, the first thing is it affects people, it affects millions of people, right? So think about the total amount of rural migrants, it's 160 million. And if you add in those migrants across cities, it could be 240 million. So that's a huge amount of people. And that's significant in that sense. Another significance is about the economy. It's going to speed up urbanization. It's going to accelerate structural change in China and also boost domestic consumption in China. So let me show you just a few figures. Now it's just a start. So this is the urbanization rate in China. So you can see the acceleration after 2000. So by 2011, more than half of China's population live in the city. But this is based on the counting, including all the people living in the city, including those migrants. If we exclude those migrants, only 36% of the population live in the city. That is 36% of people that have urban Hukou. So there is a huge discrepancy over there. And China's urbanization lags behind of its income level. So this is a figure for those middle and low income countries. So this is the trend line for urbanization, and China is here. So it's 10 points below the trend line. So this is the rural to urban migration. So as I said, it reaches 160 million. But despite this great movement of people, we still have more than 36% of the labor force working in agriculture, right? So that lags behind the urbanization rate, and also quite high if we compare China with countries of similar income, right? So this is manufacturing employment, and this is service employment. So in terms of employment, agriculture is still the largest sector in China. That's kind of amazing. People are talking about that China is moving from the middle income to high income country status in the next 10 years, but still, if you look at the employment, China is still a agrarian society. So I did a rough calculation. If we allow those migrants to gain Hukou, so their consumption, average consumption reaches the average of the urban consumption, which is 2.6 times rural average consumption, then that's going to increase China's domestic consumption by almost 12%. And that's going to lower China's saving rate by more than 4 percentage points. That sounds like a small number, but remember, China's current account surplus today is less than 3%, which means, if we allow those migrants to settle down in the city, that's going to wipe out China's current account surplus. That actually does not account for their relatives coming with them. if they can gain urban Hukou. So that's going to accelerate consumption tremendously in China. But there are also a lot of challenges. First is conflicts between local and also migrants. If you look back into China's 30 years of reform, we have never experienced this kind of conflicts. Usually we have conflicts of like SOEs versus private enterprises. But this time, it's just people against people. So like in Beijing and Shanghai, there were incidents. Local people and those migrants had a standoff. They standoff in front of government officers. So that's quite serious. And another thing is those stress on local finance, like local schools, transportation. Like in Shanghai municipal government, they gives astronomical number of schools, like thousands, hundreds of thousands of schools. And the transportation, housing, police, sanitary facilities, environmental protections, especially, say, Guangdong province, they complain a lot about the shortage of police force, right? So that requires the central government to reform the local and central physical relations. And also the land ownership. Right? Think about a village, say in Guangdong province. Usually the ratio between locals and the migrants is 1 to 10. Okay? If that village allows those migrants to gain local Hukou, that means that those migrants are going to have the entitlement to get local land. That's almost impossible. That's going to have a revolution, right? So my guess is that, especially in coastal regions, in rural areas, where most of the migrants will gain Hukou, I think land reform will have to precede the Hukou reform. That is, we are going to see true privatization or quasi-privatization, actual, virtual privatization of land ownership in those coastal regions. Right. I think that's it. To end my presentation, I have to say, Li Keqiang, to some extent, is quite optimistic, and he has kind of a vision for the future. I was reminded of his PhD thesis from our university. His thesis is about the three divisions in the society, not just city versus the countryside. Within the city, there is also an informal sector. I think his policies still echoes to his PhD thesis when he wrote almost 30 years ago. But he's going to face daunting challenges, and I believe this will be his first challenge. If he fails on this reform, it's going to be very difficult for his career. But I'm quite confident that he's going to succeed because the forces are joined together, not just from the government itself, but also from academia and from the media, right? All the supports. Okay, I'll stop here.
Yes. Yeah, my question was something which is going to have such an amazing impact on China, the reform. How many Americans even know what Hukou is? If we went and kind of did a poll, you're probably talking about less than 1%. All right, let me, let's see, Huang Yiping, who I think you all know. Most people know him as the chief Asia economist for Citibank for many years, but is now returned to academia and is teaching at Beida. So, Yiping.
Thanks, Steve. Well, it's my first time here speaking, but it's the first time I prepared a PowerPoint file. Since in Chinese there's a saying, don't do the same thing more than 3 times, so I thought of making a change. I was asked to talk about the financial reform, issues related to financial reform, and many of the issues are already covered one way or the other. But I'd like to start by my presentation by arguing that the Chinese economy at the moment is actually entering a very new phase of development. If you look at the economy, three very important conditions which were supportive of rapid economic growth in the past: unlimited labor supply, very low production costs, and a rapid export expansion are all diminishing very rapidly. That probably in part contributed to what I described as the transition from economic miracle to more normal development. And a more normal development, I mean by relatively slower growth, which may still be very significant and rapid by international standard, but slower than what we used to experience. Maybe higher inflation pressure, and also, most importantly, accelerate the industrial upgrading. And all these things we're actually seeing now, and hopefully these transitions will continue leading China to a more sustainable path of economic development. But on the way, there are lots of changes we have to experience, and in relation to the discussions we had earlier on, while we're all optimistic, we have to recognize the risks and adjustment that we have actually to go through in the next couple of years. The key point I'd like to make in relation to financial reform is that at the moment the economy is actually restructuring quite significantly, and partly because of the significant cost shock. The first wave of cost shock we are seeing in China is through wage adjustment, and we see wages rising quickly, which already lead to significant change in the economy, particularly labor-intensive manufacturing in the coastal area. The second wave, however, I would like to argue, the second wave of cost shock will come from the financial sector, and probably mainly in the form of cost of capital. And that will actually have a different impact, if you might think. The labor-intensive manufacturing, which was hit by wage increase, are already changing significantly, but most of them are either private-owned or foreign-owned, and they have to change, and they change overnight. The second wave will have big impact on these capital-intensive industry and highly leveraged industry. Guess what? Most of them are state-owned companies, and that will be more challenge. But let's take a step back looking at the financial liberalization. Financial reform is not a new phenomenon. It's been going on for more than 30 years, and it started actually from day one of financial liberalization. If you look at this financial repression index we constructed, and financial reform should be the reverse of the index. So coming down means liberalization. It's been going on for more than 30 years, and I would argue, according to our measure, maybe financial liberalization has been halfway through, roughly, depending on how you look at. But the Chinese financial reform exhibits a very unique pattern. If you look at the progress we made, and my simple summary is it's very strong in terms of building new institutions and very strong in growing the volumes, but relatively weak in liberalizing the market and in improving governance. So you're seeing a financial sector which is huge, but at the same time we are seeing lots of problems with the financial institution. More importantly, our research also found that the impact of the financial repression actually on growth was positive in the 1980s and in the 1990s, and for reasons I don't want to elaborate here, but in early stage of development, that's common. However, that has turned negative during the past years, and that is the one reason why the leaders has to be determined to push ahead with the financial reform. But at the same time, growing shadow banking businesses mentioned a couple of times already is another reason why the reforms could no longer be delayed. And you look at the total social financing, for instance, last couple of quarters, non-loan financing already accounted for more than half of the total social financing, which really some people look at it as a way of backdoor interest rate liberalization. It's good, but at the same time, it also brings about the risks, and this is the reason why you have to push ahead with the reform. probably liberalization of the interest rate, and at the same time to improve financial regulation. And this, I think, is why it is happening. Now, the financial liberalization, we actually do have a 5-year program about what is going to happen. But the liberalization in China or reform in China is always a combination of bottom-up experiment and top-down design. So for instance, you look around the country, there have been more than a dozen national financial reform experiments going on at the moment. In Shanghai, you have this experiment on International Financial Center. In Shenzhen, you have this experiment on financial opening. And in Wenzhou, you have this experiment on SME financing and so on. Lots of experiments going on. But I probably just only want to highlight, focus on 3 broad areas we're going to see major changes. And I think we're going to see major changes in the next couple of years. First, the interest rate liberalization. I guess that's easier to see, to understand what interest rate liberalization is. But it's much more complicated to implement the liberalization, because it doesn't just mean lifting the restrictions on interest rate. It means development of the corporate and government bonds, strengthening of the interbank markets, introduction of a deposit insurance system, and there is a big question about how the financial institutions are going to cope with the liberalization. But overall, I think the change in interest rate, the cost of capital, will be different for different borrowers. But on average, I might argue the cost of capital is going to rise. One simple evidence is in the formal sector at the moment, you have excess demand. Excess demand means the interest rate is too low. The second area is exchange rate, which is actually already happening, and I think it just can continue. I think the basic assumption I think most Chinese officials are making now is it's relatively close to equilibrium exchange rate now, so significant adjustment is not necessary. But if you look at what is happening last year or so, you actually start to see some two-way movements. The reason is because, number one, well, maybe it's closer to equilibrium now, and investor expectation actually move in both directions. At the same time, the central bank is reducing intervention in the market. And I think that all these will continue, plus the central bank probably at some stage will widen the band again on the exchange rate. So in the short term, I think the currency may become more volatile as the market forces start to play greater roles. But in the medium to longer term, as long as strong growth can continue, I think the currency is also continue to appreciate. Finally, well, internationalization of the currency or capital account liberalization. This is basically about achieve efficiency on capital use on global basis. And this is happening, and I think there are many economists believe that we can achieve capital account convertibility, basic capital account convertibility. But the authorities will probably reserve the rights to, number one, restrict some volatile flows like portfolio flows. Number two, certainly it wants to fight against the money laundering, so some checks and restrictions will be necessary. And finally, as IMF suggests recently, the authorities can resume some temporary restrictions going forward. So basic convertibility can be achieved, but don't think about the complete convertibility, or the authorities will have no restrictions at all. International use of the currency is also rising with the offshore markets that we see in Hong Kong, in Singapore, in London, probably in New York at some stage. And the currency is increasingly used in investment and trade settlement. But the Chinese currency become a global currency? I'm relatively cautious. I think there are lots of hurdles we have to overcome. But that's enough for us in the next couple of years. So if I have to leave you with one just comment, financial liberalization definitely is going to continue, and which is good, necessary for maintaining, supporting sustainability of Chinese growth. But we are going to see already happening, but we will see even more in the coming year, the shock, the cost shock in terms of cost of capital. That will bring even more profound implications for the economy, and I'll just list 3 areas with a significant impact. Number one, profit margins will be substantially squeezed because cost is rising, not just labor, not just capital, maybe also energy, other resources. Number two, as we liberalize, like in any other emerging market economies, we are going to see risks rise in some areas, and shadow banking business is just one example. And finally, as I hinted at the beginning, when the cost of capital adjusts, it might show some misallocated capital in the economy, particularly in the capital-intensive industry, which means at some stage, sooner or later, major consolidation may not be avoided. Thank you very much.
Thank you. Now, Gaoshan, when you have the distinction of being the one presenter here who got his PhD in China. But he is now the chief economist at Essence Securities and is going to talk about what was the hot topic last year and remains a hot topic, which is the real estate market in China and what's going to go on in 2013, and I'm sure tell us whether we should buy real estate or not.
Ladies and gentlemen, it's my honor to have this chance to present my opinion regarding China's real estate market here. As a start, let me summarize my key points here, just in case I can't finish my presentation, at least you know what I'm talking about. My first point is that I think China's real estate market hit the bottom in the first half of 2012, and it's recovering in the second half of last year. The evidence is increasingly clear from many aspects of the market that the market is recovering and is building some momentum. And my second point is that for 2013, further policy response might be possible in terms of property tax or more strict restrictive policy on purchase. However, I think another bubble may still be avoided. First of all, let me check the evidence which indicating that the market is recovering. This slide illustrates the growth of floor space of commodity buildings. And we can see that from the middle of last year, the growth is going up. And this slide indicate the operating cash revenue of top 20 listed companies in China. And the evidence is still clear that from the second or third quarter on, the sales revenue, cash sales revenue is rising up. And this slide illustrates the average price of sample residential buildings in 100 cities in China. And we can see that in the second half of last year, the price is going up. It ends its fall in the first half and began to go up in the second half. And it's important to note that the recovery appears to be very broadly based. It spreads to office building and commercial building markets as well, and it also extends to second and third tier cities apart from first tier cities. And this is the floor space of commodity buildings sold. And we can see that it's rising since the second half of last year. However, and this is the sequential price change of residential buildings market. And And for this slide, we can see the growth momentum of office building market, of residential building market, and also of commercial building market. And we can see that the trend is largely similar. The office building market and the commercial building market both climb up in the second half of last year, and the residential building market went up slightly later on. And for this slide, we can see the sequential price change of first tier, second tier, and third tier cities. And we can see that for in almost all cities, the price is going up. We know that the restrictive policy is very strict in first and second tier cities. However, for third tier cities market, it's going up, and for first and second tier city market, it's going up as well, which suggests that the recovery is very broadly based, and which also suggests that the recovery is driven by more fundamental macroeconomic factors, and which provides one of the key drivers behind the ongoing economic recovery. And as the sales of the commodity building market recovers, the fixed asset investment is following the case. And we can see the evidence one by one. For this slide illustrates the real estate investment growth, and we can see that it hit the bottom in the third quarter of last year and is going up. And for this slide, it separates the investment between office building and the commercial building market, and also residential building market. And we can see that the trend is basically similar. And this is the operating cash expenditure of top 20 listed companies in real estate market. Operating cash expenditure, and we can see that since third quarter of last year, it's going up, and we expect that it will continue to grow for this year. And this operating cash expenditure is largely in line with investment macroeconomically. And this slide illustrates the floor space of commodity buildings newly started. And we can also see that it hit the bottom recently. And for this one, we separate the data between commercial building, office building, and residential building. And we can see that the trend is quite similar. And for this one, this slide is the land space purchased by a real estate enterprise. And even though the growth is still negative, we can still see that it's stabilized in the second half of last year. And this is land sales in terms of renminbi, and we can see that the trend is basically similar, that it's stabilizing in the second half of last year. And this slide illustrates the net operating cash flow and net financing cash flow of top 20 real estate listed companies. And here we'd like to say that the cash position of the listed companies is improving gradually and significantly, which may support the ongoing expenditure growth of investment in real estate sector. And because the market is recovering and the price picks up again in the second half of last year, the government is becoming more nervous. And as this recovery appears very sustainable, we think further policy response is very possible, even inevitable, in the first half of this year. And it may be in the term of property tax. It might be in the term of more strict enforcement of the already in place administrative measures on purchase of new apartments. However, over the long term, I think another bubble might be avoided because of some more fundamental macroeconomic changes. And this slide illustrates the one-year renminbi expectation as suggested by offshore non-deliverable forward market. And we can see that for market participants, the basic expectation is that the exchange rate might be very close to its equilibrium level. And this is largely in line with the development in the foreign exchange accumulation and base money growth. And as a result, because of the disappearance of renminbi exchange rate, the interest rate is going up in China. We know that as inflation goes up and down, so does the interest rate. However, it's not that normal that the floor level of interest rate is also rising, as we can see here very clearly. For the most latest bottom level of the interest rate, as we can see here for the Treasury bill market, for one-year bill market, it's much higher than seen before. And for 10-year Treasury bill market, it's still the same, even though the gap is not that large. However, for credit market, we can observe the same phenomenon. The bottom level of the interest rate is much higher than seen before. And this is also the case. This is also the case for commercial bill market and for the shadow banking system as well. For credit market, for treasury bill market, for shadow banking system market, and also for commercial bill market, we can all observe the rise of the bottom level of the interest rate. I think this can be at least partly attributed to the disappearance of renminbi appreciation pressure and the slowdown of the foreign exchange reserve accumulation and base money. And this new financial phenomenon, this new financial or monetary condition may be helpful for the government in its fight and to control the bubble in the real estate market. And lastly, this slide illustrates the rental yields of second-hand residential building markets in China's big cities. And we can see that in the last 2 years, even though the price was still going up, however, the rental yield level is basically stable, suggesting that the price rise is largely in line with the climb up of rent level, and therefore suggesting that it's likely that at least for the past 2 years, the market is driven largely by the so-called real demand or hard demand, rather than by speculative demand or so-called soft demand. That's all. Thank you.
Okay, let me open the floor to some questions. One right up front here.
By China of U.S. Treasury Bonds.
Identify yourself first.
My name is Frank Bamberg, FB Asset Management. And the question is, on the one hand, I know China does not want to depress the U.S. economy. We're a good customer, and rising interest rates due to difficulty of selling the bonds will depress the economy. On the other hand, China has internal questions also. The question, do you think China, what is your crystal ball suggest the future of purchase of China? We're very dependent on China for the purchase of Treasury bonds.
Well, if you believe in what I just said, exchange rate liberalization plus a rebalancing of the Chinese economy means accumulation of foreign exchange reserves will slow at least, and its demand for the U.S. Treasuries will weaken. And that raises a question, to be honest, the logic of which I don't never understand why the American politicians are pushing the Chinese to rebalance the economy, reduce foreign exchange accumulation so harshly, because that would mean demand for U.S. Treasury will weaken. That is about 8% of your total outstanding market, and that will have implications for the cost of funding here. I don't know the answer, but that's going to happen.
Some other over here, this row there.
John Allen, Greater China Corporation. And this is a question for Yao Yang. If my family and I move to Shanghai, first of all, can we become Chinese citizens? And next, can we qualify for the Hukou?
China's citizenship actually is determined by blood, I think, not by residence. So in that case, I think if you want to become a Chinese citizen, you have to apply. I think that's the process.
Yeah. I think it's very tough. There is a provision in the law that they make 10 people honorary citizens every year, I recall.
Hi, Brian Degnan, Taylor Rafferty. My question is for Yao Yang also.
A little louder.
My question is for Yao Yang. So you mentioned actually that, Stephen, you actually mentioned that about 1% of people in the US might know what Hukou even means. But if you read, the sort of China Watcher literature, it comes up again as the sort of underlying issue without which nothing else can really change. So I just wonder why now the political will might exist to make a significant Hukou reform, whereas the problem has been identified for a very long time and a lot has not changed yet. And for a lot of the reasons that you identified, the sort of infrastructure, et cetera, that are going to be significantly disrupted if that were to occur. So I just wonder why now, or even if you think now things will change.
But that's a good question. I think the Hukou reform didn't start just now. I think it already started in 2003 when the Wen Jiabao government came into office. So the Wen Jiabao government got rid of many of the restrictions of free mobility, right? But this time, why the government really want to solve this problem, I think there might be two reasons. Kind of, you are asking me to read the mind of the top leadership. I think one is because there's a huge amount of migrants living in the city, and also the second generation of migrants are growing up. If this problem is not solved, it's going to cause huge social problems, resentment from the second generation of those migrant people. And second is, I think, because of Li Keqiang, as I said, might be just because of his own political or social convictions. And he believes this is a very important issue. I don't know. This is just a wild guess.
You're hearing a very pro-Li Keqiang view because Li Keqiang is a graduate of Beidon. Everybody here is proud of Beidon. So let's see, we had right here.
Yeah, my name is Yang, and it's a question for Dr. Gao.
Identify yourself.
Yang, from Midway Group. It's a question for Dr. Gao on real estate. Appreciate review in terms of stabilization of a real estate market in China. So what do you think will be the long-term trend for real estate in China? I know that, for example, the ownership rate, residential ownership rate in China is over 80%. Given the capacity that's evolving, the ownership rate for residential housing in China is likely to be over 100% in the next few years. Meanwhile, the ownership rate for most developed countries are under probably close to 70%. It's a similar kind of question for commercial real estate as well. How do you look at the long-term trend for real estate in China? Thank you.
One possible indicator I'd like to suggest is the number of pupils enrolled at the kindergarten in China. And in the past 5 years, the growth rate for this number is roughly 10%. However, the population growth cannot be that large. And this number largely is in line with the speed of migrant workers move and to live in the cities ultimately. Therefore, my speculation is that the long-term sustainable growth of floor space for residential building market might be close to 10%, if not higher. And for the recovery of second half of last year, I think I treat it as mean reversion of the market. The market is being normalized, is being more normal. And for the long-term sustainable growth for the residential building market, the growth rate might be very close to 10% level. It's much smaller than what we've seen in between 2000 and 2005, but it's still quite high.
Go ahead.
Hi, Vivian Chow from Deutsche Asset Management. My question is on the interest rate. Some people have said that interest rate has been kept artificially low in China so as not to encourage efficient capital allocation in the past. Do you agree or not agree with this view? And a follow-up question is that how do you expect the interest rate liberalization impact the profitability of the banking sector? Thank you.
As I said, I think first of all, if you look at the formal banking sector, I do think the interest rate is probably too low. That is why the informal lending is rising so quickly. In other words, in the formal market, it's not cleared. And so the interest rate is too low. That's one way of looking at it. But whether or not that necessarily means interest rate or cost of capital will rise for everybody following interest rate liberalization, it doesn't have to be. For instance, for the private sector, which is borrowing from the informal lending at the moment, they will probably be able to enjoy lower cost of capital in the formal sector, but that will still be higher than the current official level. Even some large companies which are borrowing massively from the banking sector at the moment, if they're able to tap into the debt market, for instance, they might actually be able to push down the cost of capital. So it's a very complicated story, but I think a simplistic assessment that the cost of capital is too low, which I agree, but there's also a big issue of misallocation of capital to the sectors. Whether or not the banking sector could survive the adjustment of the interest rate, I guess it depends. But I do agree it's a major challenge, especially for the large banks. Because number one, when interest rate liberalizes, the capital market will have to grow significantly, which means some disintermediation of the banking sector. Their books will have to shrink. Number two, interest rate spread will probably have to narrow. And number three, well, most of the banks at the moment are having a comfortable life just dealing with very large and profitable SOEs. They will probably have to shift their priority of business and deal with more of the smaller companies and maybe the individuals. All three putting together, I can't say they will fail. I think many of them will succeed, but the challenge will be pretty tough in the years ahead.
Jennifer Zhang from New Tang Dynasty. My question is actually for Dr. Qin. You mentioned about corruption in China. So in the West, we have saying that absolute power leads to absolute corruption. In China, we have a saying, if 反腐败亡党不反腐败亡国, which means if we fight the corruption, the party is doomed. If we don't fight the corruption, the nation is doomed. So I'm wondering, what is the way out do you see, or do you think the party is ready to let go of the absolute power? And my second question is
one question. You only get one question. We're out of time.
Thank you.
Thank you.
I think it's quite serious issues in China. And I also said the new leaders fully aware of this the importance of this issue. The people hate corruption. I think they also pin a hope for new leaders to carry out anti-corruption, because comparatively speaking, they are clean. They are not. Some people you cannot rely on because they are himself are corrupted. The reason why they still pin the hope, number one, they believe the new leaders are quite clean. Number two, because our party made a lot of mistakes, but also did a lot of good things. They build up credit, so people still pin hope on it. But if they failed, that I don't know if Wang Dang or Wang Guo, I don't know anything happened, but they failed, it's quite risky.
That's
answer your questions?
I think that's a perfect note to close this panel, and let me turn it over to my partner on this enterprise, Professor Yao Yang, to give just a few words in closing.
Well, not anything closing, but I would like to say that in this panel we have sent out very positive signals for the next year and the next 10 years of China, and primarily because the new leadership has illustrated many reform agendas, and many of them are going to change the Chinese economy. And for that matter, that's also going to affect U.S. China economic relations and also the world economy. I think we are today talking about China, but one of the underlying forces to draw the audience here is actually the China-U.S. economic relations. And I think for that, I hope the both new leadership will have a more open mind approach to the relationship. As you know, in this century, the U.S.-China relations are going to be the most important, determining the fate of the world. United States used to have an approach to China. In the last decade, it was discussed much less. I hope that in this new era of the leadership, there will be a new approachment from policy from the U.S. side that emphasizes coexistence and cooperation instead of confrontation. That's going to be good, not just for U.S. and China relations, but it's going to be good for the whole world. Thank you.
And I agree. You know, for the last 46 years, the National Committee has tried to educate Americans about China. And I have to say that at the end of our last campaign, congressional, Senate, and presidential campaign, I actually was a bit depressed that the discussions of China, China's economy, U.S. China relations, U.S. China economic relations was so simplistic, lacked nuance, lacked any balance, that I kind of felt, gosh, you know, are we just, as Chairman Mao would have said, are we just swimming against the tide and we're just going to be washed away? But then I spend this morning here, and kind of the nuance, the balance, the depth of the analysis that our friends from CCER have brought, and that's being broadcast by the media, kind of reinstills my belief that what we do is worthwhile. So I thank, from the bottom of my heart, our friends from CCER for flying all the way from Beijing to educate us. I thank our friends from XCOL and Van Eck Global and the Star Foundation and our friends at the NYSE for allowing us to do this. And I thank all of you for being a wonderful audience. It has been a terrific program. It's our 4th year, and this is the best yet. But thank you all. It's been wonderful.
There's still people standing in the back.